This is Commodity Wrap. I'm Tony St. James. Our guest today, it's Brian Hoops. Brian's with Midwest Market Solutions. You know, Brian, we do this from time to time, but what's the elevator speech for who Midwest Market Solutions is?
Yeah, Tony, good to talk with you as always. So, Midwest Market Solutions is a brokerage advisory service located across five different states. We used to be had locations in 10 states, but the industry's kind of contracting, and brokers are retiring and shrinking maybe the workforce a little bit. But we have clients almost all over the country and up in Canada. So founded in 2002, 24 years ago now by myself, and hopefully we've grown and expanded and over that time frame, and hopefully have helped out a lot of farmer clients and head feedlots, and we provide brokerage services, advisory service as well. So one of our offices even does insurance, but I don't dabble into that. I have enough things going on with these markets.
Well, speaking of these markets, how about we jump in? We look at how we traded the day, and I'm going back to how we traded on Tuesday, because Tuesday we were mostly lower. Now, the November bean contract settled higher. We had Chicago wheat higher, but really other than that, and then canola, oats, and rice. But corn was lower, the majority of the wheat contracts, and the old crop beans lower. And then we roll into Wednesday, not real sure which direction to go this week. And, well, we found the path of least resistance was lower. What happened?
Yeah, I think this market got hit with a couple different things. So one, was a real positive on Monday where we had the news about China stepping in and buying U.S. ag products, maybe $17 billion on an annual basis on top of the soybean purchases that they've committed to already. So some real positive news, and funds were aggressive buyers of over 53,000 contracts of corn, but they also had sold 48,000 corn going into the weekend. And I think we're starting to shift a little bit of the mentality to away from what's happening with the war in Iran and growing conditions in the United States. And, we talked last week about if you look at these markets just in a vacuum, and the only thing you could focus on was crop condition, ratings, planting progress, weather, you'd be selling corn like crazy, selling soybeans, because conditions overall are above normal, and the trade should expect above normal yields at this point in time. So we should be removing some premium. We did that today. We kind of consolidated on Tuesday with these price levels, and then after Tuesday's trade, without having any real bullish fodder, we started to take a lot of premium out of these markets. And it does look like we have maybe $5 corn, $12 soybeans. We talked this morning. Those are very attractive hedging opportunities for producers, and I think there's a lot of premium in the market because of higher energy costs, higher fertilizer costs, and because of some weather concerns, and we're starting to remove some of that from the marketplace in today's trade.
Okay. Also want to just kind of walk through a couple of other markets that we've had an eye on. The equity markets, and we saw some big gains out of the Dow on Wednesday. S&P moving higher, some good gains out of the Nasdaq as well. Has it been a money flow issue back into the equities?
Yeah, a lot of portion of the activity has been some money flow. We were lower for early morning last night, and then when the crude oil market reversed course, that's when we really started to pick up strength in the S&Ps and saw lower opening give way to a higher rally as crude oil really started to sell off. Now that sell-off started in the overnight. We had consolidated up near resistance in the crude, and then the market sold off and sold several dollars off on some comments that President Trump made that he thinks we're kind of at the last stages of this war with Iran. And so market has seen this before where we've sold off hard and maybe so far the war hasn't come to an end, but one of these times it probably will. And we've sold off near support, which really gave a rally into the metals and the equity markets during today's trade. Seasonally, this is a higher time frame of the year for our equity markets, and for gold and silver, they usually do move higher during the summer months anyway.
Okay, quick break here. When we come back, we'll look at the livestock markets. Got a few headlines to trade, plus a report coming at the end of the week. What's all ahead? Find out next. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian's with Midwest Market Solutions. He's online, MidwestMarketSolutions.com. Red across the board when we looked at the row crops. I mean, everything I looked at in the grains and oil seeds was lower. You go over to the softs, and that's your cotton, sugars in there, cocoa, coffee, orange juice, all of those in there, and the only one that was higher that I could find was orange juice. Now, I was expecting at the end of the day to see a lower close as well in the entire protein space, as we kind of in mid-morning had to move lower on a story out of Fort Morgan, and that involved a Cargill packing plant there. But at the end of the day, how about that? Feeders came back around. What are we watching here in the livestock markets?
Yeah, I'm glad you brought that up about the packing plant in Fort Morgan. Now, that plant apparently has been dark for about 4 weeks. It's a 4,000 head kill facility per day. It's been dark already while they're trying to work out a new agreement. But I think what spooked the cattle market is Cargill locked the doors today and have ended negotiations. And so it appears this plant is going to remain dark. It's not going to come back online anytime soon. Of course, they can reach an agreement at any time and things can reverse. But that's what the market perceived out of the actions by Cargill today, is they're done negotiating, and the market sold off hard. This usually is bearish. You disrupt the supply of the marketplace and some of the demand, but you also prop up box beef. Now, they've already done that. We're really not changing the kill numbers here because we've already done this over the last month, but it did spook the market and we sold off. Interesting that feeder cattle came back roaring higher. August up over $2 by the closing bell on a lot of short covering. We did hear just a little bit of cash cattle trade this afternoon. We saw a packer in Nebraska pay $265 and $415. So there's nothing wrong with our cash trade whatsoever this week. It's very strong cash markets. And I think you'll see stronger cash trade this week despite the weakness in the futures. Then, of course, on Friday, we have the cattle and feed report. Looks to be a little bearish. Seasonals usually turn higher around Memorial Day and go rally into the 4th of July holiday. So a lot of things at place in here. Some are working in the favor of the feedlot. Some are working in favor of the packer at this time.
Yeah, again, I'm glad you brought up the cash side of this trade because, in my mind, there's just been a disconnect here. As we continue to push higher on the cash side, we're just not seeing it followed up over on the live cattle side. We also have a front month here in feeders expiring. This is the May feeder, and it really needs to converge with the index. Have you been watching that here at the end of this contract?
Right. This index did move higher today. It's been down for a couple days, but found some strength today, up nearly $3. So it's about $372.50. And that leaves the May contract at a big discount. Now, May goes off the board tomorrow, which is about a week earlier than normal. And that's because of the Memorial holiday next week. So they decided to move the expiration up to the 21st. It goes off. But really needs to rally up to where that index is, and it's a lagging index, so we won't have the settlement until after Friday's close of the feeder cattle. But certainly, it looks like May feeders are to discount, and then if you look at the August, which rallied today sharply, it's at $365. It's holding a steep discount. In fact, live cattle holding a big discount to the cash. Feeders are doing the same thing. Where in the hog market, you have the opposite, where lean hogs at $97.27 are holding a fairly sizable premium to the lean hog index. That's the measure of the cash markets there.
Okay. Before we let you go, if we want to keep up with you and Midwest Market Solutions, how do we do that?
You can find us online, MidwestMarketSolutions.com, or you can give me a call if you want to talk markets directly at 417-501-5132.
Again, he's with Midwest Market Solutions. The president is Brian Hoopes, and this is Commodity Wrap.